So what happens when just one, totally out of the blue political threat sends a massive shockwave through the entire global financial system? Well, today we're going to connect the dots between, of all things, a real estate deal for Greenland and a day of absolute record-breaking chaos on Wall Street. You're not going to want to miss this.
All right, so here's our roadmap. First, we'll dive right into the market chaos. Then, we'll pinpoint the shocking cause, figure out what all those numbers actually mean, and finally, we'll zoom out to see the bigger picture, even getting a view from the World Economic Forum in Davos.
Okay, let's set the scene. Picture the trading floor. It was one of those days where everyone's on edge, because the oldest, most reliable places to park your money when you're scared, I'm talking about things like gold, they started doing some really, really unusual things.
$4,755. Just let that sink in. On this particular day, that was the new all-time high for a single ounce of gold. A surge like that, that's not just a market move. It's a classic textbook signal that investors are seriously panicking and running for cover.
And you know what? It wasn't just gold. Silver absolutely exploded, posting a mind-blowing 200% return over the last year. We're not talking about a small shift here, folks. This was a full-on stampede into precious metals. It just shows you the sheer scale of this run for the exits.
So, while all that money was flooding into metals, stocks were telling a completely different and much uglier story. The big ones, the Dow, the S&P 500, the Nasdaq, they all just tumbled by over 1%. Think about that. This was such a dramatic reversal that it wiped out all of the market's gains for the entire year in just one morning.
Which of course brings us to the big question, right? What on earth could possibly cause such a massive, coordinated, and sudden shift in the markets? I mean, everyone just dropping stocks and running to old-school safe havens all at once? The answer is honestly kind of unbelievable.
So, the catalyst for all this chaos? It wasn't some bad earnings report. It wasn't a surprise move from the central bank. Nope, it was a political threat from President Trump, linking new tariffs on Europe directly to buying Greenland. Yeah, you heard that right. And this wasn't some backroom rumor. The threat came straight from the president's Truth Social account. He said tariffs would stick around, quote, until such time as a deal is reached for the complete and total purchase of Greenland. I mean, let's be clear. Tying global trade policy to a real estate deal of this magnitude, it's just something we've never seen before. And this threat? It was laid out in very clear, escalating steps. Step 1, a 10% tariff. Step 2, a few months later, that jumps to 25%. And Step 3, those tariffs stay put, forever basically, until the deal is done. This wasn't a negotiation tactic, it was a straight-up ultimatum.
Okay, so we have the cause, the Greenland threat, and the effect, total market chaos. Now, let's really decode what all those frantic movements were trying to tell us. Because every single flicker on those trading screens, it's part of a much bigger story about confidence and about fear.
This right here gives you the whole picture. So, stocks going down? That's easy. People are fleeing risk. But look at the other moves, because they're even more revealing. The yield on the 10-year Treasury went up. Now, that only happens when people are selling U.S. government bonds. The thing that's supposed to be the safest investment on the planet. At the exact same time, the U.S. dollar was falling, and the VIX, Wall Street's fear index, it just shot through the roof. That spells pure, unadulterated uncertainty.
And let's zoom in on this number for a second. 20.69. That was the peak for the VIX. Now on Wall Street, anytime that index goes above 20, it's a huge psychological red flag. It's basically the market screaming that calm has officially left the building and genuine alarm has kicked in.
So when you put all these signals together, selling stocks, selling bonds, and selling the dollar all at the same time, it points to one single, deeply worrying idea that experts were afraid was making a comeback. It's something they call the Sell America trade.
So what exactly is the Sell America trade? Well, it's the nightmare scenario, really. It's when investors all around the world look at the U.S. and decide that the risk of holding American assets just isn't worth it anymore. And so they start to dump everything. We're talking stocks, bonds, the dollar itself, all because they're worried that U.S. policy has just become way too volatile and unpredictable.
And look, why does this matter so much? Because it's a direct hit on the very foundation of America's economic power. It chips away at the dollar status as the world's go-to currency. It makes people question whether U.S. bonds are truly the safest place to park their cash. And bottom line, it just weakens America's financial standing across the globe.
Now, as absolutely shocking as this full Greenland thing was, it didn't just pop up out of nowhere. To really get why the market freaked out so badly, we have to zoom out a little and see that it's actually part of a much bigger pattern.
This timeline really tells the story. You see this recurring cycle happening during the president's second term. Back in March of last year, you had tariffs that sent the VIX screaming past 30. A month later, so-called reciprocal tariffs pushed it all the way past 40. And now, this Greenland threat has once again shoved that fear index right back over that critical line of 20. It's a pattern of shock after shock.
And believe me, this pattern has not gone unnoticed by the big players in global finance. Over at the World Economic Forum in Davos, you could just feel the mood. It was this growing sense of concern about the stability of, well, the whole system.
Sergio Armati, he's the CEO of the huge global bank UBS, and he just captured the feeling perfectly. He said, there is a limit to how many things you can put on the table without eventually one day one of them going out of control. What he's really describing is this pileup of risk that's getting bigger and bigger and dangerously harder to control.
And this isn't just talk, it's having a real-world impact. Armati said that the constant, sheer volume of unpredictable news is forcing global investors to do something very specific, to actively start moving their money away from U.S. assets.
Which leaves us with one last, pretty unsettling question to think about. You see, markets can handle risk. They do it every day. But what they can't handle is total unpredictability. So as this kind of politically driven chaos becomes the new normal, you just have to wonder, how much pressure can the pillars of the whole global financial system, things like the US dollar and US bonds, how much can they really take before something finally breaks?